Has there anything that you've seen in the last couple of days that makes you feel more or less optimistic or more or less pessimistic, given the narrative that we've seen in the markets?
Yes. Yeah. Hey, morning, Dom, and happy holidays. Yes, I would say one thing. Looking back on 2022, there was a lot of things that were unpredicted, especially on my end, and we missed some predictions, and it was a terrible year, as you mentioned, for a lot of asset classes, especially equities. And if you're looking at 2023, some of the things that I think that had not bode well for the last year are going to turn around some way in the first or second quarter of 2023. So I think there's reasons to be optimistic, not just yet. I still think there's some things that will, there's still some downside risks to the market. One, when you look at, obviously the monetary policy we have from the Fed, that we still need to see something on the job front, or they're still looking to see something on the employment front to see whether or not we're going to have that inflation finally start to slow down a little bit more towards target. Obviously, you have some still issues with supply chain issues, especially overseas, that are going to be still hampering, especially some of the growth areas of the market. And I think those are areas that are going to be persisting through the first quarter of 2023. But I do still think at that point, there's going to be opportunities for investors to dive in, especially at attractive valuations when we look at mega cap, tech, and some other areas of the market that have been really, really beaten down. Those are the areas that I'm looking at and going to be continuing to buy somewhere in the first or second quarter of 2023.
All right. So when it comes to that mega cap tech trade, I key on it because it's been arguably the epicenter of all the downside here in the markets, markedly so in the last kind of few months here. If you look at some of these names, we're talking like the Apples, the Microsofts, the Alphabets, the Amazons, the Teslas, the Meta platforms. Are any of those attractive enough given the sell-off right now?
Yes, 100%. And they are very attractive. I think, if you look at Apple, it's probably performed the best out of those names. That's one of the stocks that I think I like it. Obviously, I really like it 2023. There's a couple of reasons for it. One, with the consumer, being on the brink of kind of personal savings rate being down, consumer being on the brink of kind of being in a really rough position, Apple's still continue to perform strong. One, they had reached their all-time high on all their major products of usage, and they're able to sustain with some of the detraction we've had with supply chain issues. They're looking to move production out of some areas that are not as less productive and into more productive areas. So I think that's a big thing that we have to look at. Then obviously with Amazon, it's fallen hard. That was one of the top picks for myself in 2022, and I still want to hold on to that. I think it'll perform much, much better after performing pretty much sideways to the downside in 2022. Much better in 2023. And I think with their higher margin business growing faster, that's something I really like. They're competing against, Azure. They're competing against GCP when it comes to the cloud business. But I think they're going to continue to sustain and grow that side of the business. So I really, really like those two companies going forward.
And Delano, outside of big technology, media, and telecom, are there any of these other so-called value-type stocks that are out there that are not the growth-oriented ones that you think could be positioned well for 2023?
Yes, Dom. And really, on that value side, I'm going to healthcare. I'm looking at healthcare as the one that's going to be a staple that will continue to hold and buy more for investors. You look at United Healthcare Group, traded really, really well over the past 5 years. And the reason why you'd buy right now is because it's strong, has a strong dividend yield, and that's something that investors would really need, and this obviously need over 2022. And then if you look at the margin expanding, they've done well on that side of the business, especially when you look at the different areas in healthcare. So I like United Healthcare Group, and just in general, the healthcare sector, I think that's one that you want to stick into as a good staple in the first couple of quarters of 2022 and potentially beyond.